Can you beat the stock market just by flipping a coin? I just tried that for a full year, but did it work? What is happening, people? My name is Robbie, and today I'm going to tell you the results of my year-long stock market experiment.
It ain't rocket science, for Christ's sake.
So last February, when I only had 108 subscribers, I posted my 6th ever YouTube video, and it was titled The $1,500 Coin Flip. This was a very basic premise. I looked at the FTSE 100, which is essentially the 100 largest companies by market cap on the London Stock Exchange. I took all 100 of those companies and I added it to one of those spinny wheels. Every time I spun that wheel, it would provide the name of a company. I would then flip a coin, and if the coin was heads, I would buy $150 worth of shares in that company. If the coin flip was tails, I would just remove that company from the wheel and spin again. Eventually, I ended up with 10 companies. These were as follows: BP, National Grid, Spirax Sarco, Rolls-Royce, JD Sports, Halma PLC, Intertech Group, Rio Tinto, and Hikma Pharmaceuticals. Now, because all 10 of these companies were held in the FTSE 100, the challenge was, can these 10 companies, which were randomly chosen, beat that index? Essentially meaning, can a random coin toss beat the market? The market being the FTSE 100. So it's been 363 days, and I've just sold all of my holdings. You're probably thinking, Robbie, this was a year-long experiment, why have you sold all of them 2 days early? Because I'm stupid, that's why. I thought they were meant to be sold today. They weren't. They were meant to be sold in 2 days. But we move on, the experiment still is valid. So I started this challenge on the 23rd of February 2021, and on that day the FTSE 100 opened at £6,625.94. This morning it opened at £7,513.62. This means it increased in value by £887.68 over the past year. Now, if we divide that number by the original price of the FTSE 100 and multiply that number by 100, that gives us the increase as a percentage. So the FTSE 100 did pretty well over the past year and increased by 13.39%. So that's the benchmark. To beat the market with this challenge, the portfolio has to be worth at least $1,701. And I'm not going to hold up this video much longer. There's only one more thing to do before we get into the results, and that's have a look at the predictions from last year. So my big cousin Stephen, he mentioned that he thinks Experian was a pretty safe bet, but he didn't actually make a prediction on which stock he thought would perform the best. So I'll just take Experian as his prediction. Ryan Lynch, or Lynchy if you watch me on TikTok and you've seen his name mentioned a few times recently, he predicted that Rio Tinto would perform the best over the year and made a very bold prediction that JD Sports would go into administration. Bryony Watson, that's my fiance, she predicted that JD Sports would perform the best. And Marshall Smith, the only person that I didn't actually know who commented on my video, so thank you Marshall, he thought that Rolls-Royce would perform well. Did anyone predict correctly? Let's find out. So I'm going to start with the worst performer and work my way up. So starting at the bottom, we have Hikma Pharmaceuticals at $126.13. But Hikma did pay dividends of $2.37 over the past year, so that brings us to a loss of 14.33%, which equates to $21.50. So I'll put a running total down in this corner here, and that running total is 14.33%. Next up is Intertech Group at $142.13 and dividends of $2.86. This gives us a 3.34% loss of $5.01. Running total is now $26.51 down, which is an 8.84% loss. Halma PLC is next, sitting at $143.07 and dividends of $1.12. This gives us a 3.87% loss of $5.81. The running total now sits at minus $32.32, which is a minus 7.18% return so far. So the percentage is slowly but surely getting closer to break even, which is good. JD Sports, $144.51 and a measly 25 cents dividend. That's a 3.49% loss of $5.24. The running total now sits at minus $37.56, which is a 6.26% loss. So Brian's prediction of JD Sports was incorrect. Now we're into the profit making investments. So the only way is up from here. Next up is Rio Tinto. So Ryan Lynch was incorrect as well. Rio Tinto sits at $135.29. So you're probably thinking, that's the second worst performing stock so far. But wait till you hear this. Rio Tinto paid a whopping $16.20 in dividends in the past year. So that actually takes Rio Tinto to a profit of $1.49, or 1.06%. This brings the running total to negative $36.07. Meaning we are now at a running total of minus 4.81%. Rolls-Royce is up next, which was Marshall Smith's guess. Rolls-Royce sits at $156.10 with a solid dividend of absolutely nothing. This brings the running total to minus $29.97, or minus 3.33%. 4 stocks to go. Can we beat the FTSE 100 return of 13.39%? We're currently still in the negative, so it might be a bit of a push. Spirax Sarco is up next, $159.10, with dividends of $1.70. That's a 7.2% profit of $10.80. The running total now sits at negative $19.17, or minus 1.83%. Experian is up next, meaning that Stephen was the winning guess. Experian wasn't the best performer overall, but it was the best guess, so congratulations Stephen, you win. There is no prize to this competition unfortunately. So Experian sits at $175.44 and paid dividends of $2.16. That's a profit of 18.4% and brings the running total into the green. It's also the first stock to actually outperform the FTSE 100. The running total is now $8.43 in profit, so that's a nice 0.7%. So we're now probably So the portfolio is now beating the return that I probably would have got if I kept my money in a savings account. National Grid came in second place with a price of $193.62 and dividends of $8.66. That's a profit of $52.28. Running total is now at 4.5%, so a decent jump, or $60.71. And last but not least, the best performer in the bunch, unsurprisingly given the current petrol prices and gas prices, BP. BP finished on $202.06 with dividends of $6.01. That's a return of 38.71% in the past year, and that gives us our final running total $118.78 in profit, a 7.92% return. So unfortunately I have to hold my hands up, we didn't beat the market. If I had invested that $1,500 into the FTSE 100, I would have ended up with $1,700 as opposed to $1,577. I think there are a few things we can take from this though. One lesson to take from this is to invest your money. With inflation last year sitting at 5.1%, if I had left that $1,500 in the bank, it would have essentially been worth $1,423.50 in terms of actual buying power. My money would have been worth less. So regardless of investing into an index or flipping a coin and buying 10 companies, my money still would have outperformed inflation. Leaving your money in a low interest savings account just erodes it over time. So with blindly investing your money with a coin flip or taking a hands-off approach and just putting your money in an index, you can still see a decent enough return. So imagine what you could do with your money if you took some time to learn how investments work, what certain companies do, how they make their money and their profits, and made some educated choices on your investments. Of course, regardless of what anyone tells you, no one can predict whether the stock market's going to go up today, down tomorrow, and if they could, they would be wealthy beyond belief and they wouldn't need to sell you a course telling you how to do so. But let's just say you really done your homework. You spent hours upon hours researching these companies in the FTSE 100. You decided to invest $1,500 split right down the middle, $750 into BP and $750 into the National Grid, because you'd heard a lot in the news about energy supply issues in the UK. You would have ended up with $2,051.69 after 1 year, considerably beating the market. There's also the dividends to consider here. That portfolio paid me $41.33 in dividends. Now I know $41 is not a lot of money over the course of a year, I know that, but if you have your money tied up in a savings account, does it pay you dividends? It's a small amount of money, but it's still profit, it's still cash. And it's money you wouldn't have received if you hadn't invested the money in the first place. This experiment didn't go to plan in terms of beating the market, but I did end up $118.78 better off than I was last year by flipping a coin. I done nothing, I done no research, no homework, didn't even look at the news. So what will I do with that money now? To be honest, I'm considering keeping the money in the eToro account and using that platform to invest in dividend stocks. And whenever those companies pay me dividends, taking the dividend and putting it straight back into the company that paid them out. Just another small way to grow the portfolio. If I do decide to do that, I'll make another video discussing what companies I've chose, what dividends they pay, how much I should expect to receive in dividends over the next year. So make sure you subscribe to the channel so you don't miss that one. Thank you as always for watching folks, and I will see you next week. Take it easy.